We're going to have more on Apple's meteoric rise from Bloomberg's top-ranked analyst on Apple. He's with, of course, as Zara said, Piper Jaffray. Gene Munster's with us by phone this morning. So, Gene, Apple's over $300 a share. You see $390. What's your time frame on that?
That's the next 12 months, and I think that if you just look at the momentum in their business, it sounds hard to believe that the stock can be $300 and have another 20–30% upside. But the reality is that the stars are aligned for this stock to go higher.
Well, it seems like when we talk about the demand for Apple's product, that they're a consumer outlier. I mean, we talk about all the pressures on consumers' pocketbooks right now, and yet the demand seems to be holding up there. I mean, what's the risk?
I think that the risk is just that the consumer adoption just slows. I don't think it's as much of a competitive risk. Google is a competitor that ultimately can tie devices together. That's the big theme that really is happening here is people want devices that are connected, and people want more from mobile computing, and Apple's doing that. So I think that Google is a risk on the outside. I think just the timing of consumer adoption is always a risk. I think the reality is this: Apple is in its market share is going to increase dramatically in the next 5 years. It's about 5% of mobile phones and computers today, and that number is going to go much higher in the next decade.
Walmart now confirming that their Sam's Club division is going to be carrying the iPad in their stores. What does that do for them, and how much is international growth part of your estimate?
I think that Walmart really illustrates that Apple is no longer just a brand for the high end. And what we've noticed is, in particular in the past 18 months, is an acceleration in the types of income classes that are buying Apple products. And I think that really illustrates that. And that's kind of part of the international rollout, too, is because internationally, obviously, it's the income levels are a little bit lower, but Apple has products that range between $49 and really $2,000. 5 years ago, it was really they had a $200 iPod, and then the next product was $1,200. So much broader product line, targets a much greater audience, which means greater market share, which means the stock should go higher.
Interesting, because we're talking about Walmart. I mean, their average consumer makes, what, $45,000 a year, yet there's appetite there potentially for this kind of product. Gene, talk to me a little bit here about the earnings question. What's the risk on that front when we hear from them next week?
Well, the component environment's always a wild card. Obviously, that they don't have full control over that, so that's part of the risk. Also, the iPad, since it's growing so fast, it has a lower margin than the rest of their business. So this is really the second quarter of the iPad, so analysts are just starting to get more accustomed to how to model for that. So there's always risk with that. But I think that those risks are temporary in the sense of just kind of right-setting analyst expectations. More importantly, is the growth going to deliver for next year? And I think, as we've talked about, is that all indications are that this epic growth story can continue.
All right. Gene Munster joining us by phone. He is, of course, top-ranked analyst on Apple stock.